What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And today we're going to take a look at a lot of cryptocurrency charts, including the Bitcoin price chart and several different altcoin charts, because in today's video, I wanted to thoroughly discuss mathematics and percentages and why they're so important to me. Now, this was something I had thought about all morning. I was like, this is the thing that I'm going to talk about in today's video. And then like magic, it's as if somebody was like speaking to me through the universe. I guess the hiker at Stokes Fast on Twitter posted this. It said, I got this from my morning newsletter, so good morning and happy Fib Day, my man. 11/23 is the second holiest day of the year for math nerds after Pi Day. Why? Because it's Fibonacci Day. And sure enough, it is. Happy Tuesday, November 23rd, which is Fibonacci Day. As you guys know, my favorite tool to use in the cryptocurrency market and really in any type of charting is the Fibonacci extensions and the Fibonacci retracements. I've said it a million times, if I had to lose every single indicator there is, whether it's the relative strength index, the MACD, Bollinger Bands, moving averages, anything, if I had to lose all of it and could only use one indicator, what would it be? It would be the Fibonacci's. I've been in this market since early 2017. I've had the opportunity to play with almost every indicator that exists out there. I've done all the different types of things you could possibly do with trend lines and everything possible with pitchforks and relative strength and all the different things. And in the end, it all tied back to nothing really mattered outside of Fibonacci's. Because when we talk about relative strength, when we talk about trend lines, when we talk about MACD and Bollinger Bands and volatility squeezes, all we're really trying to do with that is predict time. But time has still proven over and over again to be nearly impossible to predict. However, Fibonacci's, like magic, tend to work unbelievably frequently. And Fibonacci's don't just work on charts. They occur in nature, in human behavior, and events in the world tend to occur right when they're supposed to, right when time has met with a Fibonacci sequence. One of the most incredible things we've witnessed recently with Fibonacci's is that I built my course over here on bcbacker.com mid last year, at the end of the summer last year in August and September. And in my personal exit plans, I talk a lot about this behavior of a rally prior to capitulation leading on to a 4.236 extension with a giant knockback happening in the market. This is Litecoin from back in 2014, 15, 16, and 17, and how a lot of my exit plans are based on this. I base a lot of what I do in this market based on Fibonacci's. And for those who followed during that time, we got to watch the total market cap of all of crypto do precisely that, get rejected by there. And then what ended up occurring at that time? Events decided to show up at that time. Elon Musk turned incredibly negative on Bitcoin and crypto. China banned Bitcoin mining. Overwhelming worry about Tether. We then get the death cross over there on the moving averages for Bitcoin. And all these events lined up exactly as we reached out to the Fibonacci extension. Something we talked about way back in here in my course when the total market cap of crypto was only $350 billion. Then it precisely hits it at $2.5 trillion, and then all the events show up at the exact time they're supposed to show up, as if it's like magic to happen to occur at this exact time. And so for me, a lot of things that I do are focused around Fibonacci's and extensions and what percentages are available in the market. And in my course, I have a section in here called Percentages Mean Everything, Price Does Not. And so while to me it feels like it's a topic we don't need to talk about because it makes perfect sense to me, the reality is that's not what happens in markets. Most people come into markets because markets are going up really fast. They say, wow, it's super exciting. I want to be a part of that. And they'll buy into something as it's already really high, hoping that they can perform the exact same thing that has already happened. And many times they just don't even check the percentages on it. I've been very vocal that, hey, look, I'm looking at the Fibonacci extensions here for Bitcoin. I've studied the past. We've done the exact same structure that we did back in 2013 for a super cycle. It's reaching out to a 4.236 extension. The percentages available on Bitcoin, if any, are very, very dismal. And, well, if you take a look at what the general public is looking for, they're all hooting and hollering for a $100,000 Bitcoin. Yet, the mathematics and the percentages of a $100,000 Bitcoin are dismal. Whether it's $140,000, whether it's $200,000, the percentages are not very big, especially when we look what has happened in this bull run so far. Bitcoin has risen a total of 2,106%. Even if Bitcoin were to clear above that high and go all the way up to $200,000, it's still only 193%. Meanwhile, we've already done 2,100%. Yet the general public is hooting and hollering and screaming that they want to get these prices. Never mind the fact that the Fibonacci extension for a 4.236 is only 24 to 25% away from current prices and a mere 4 to 5% higher than where we've already hit. The general public still believes that $100,000 is the place to go to. Now, just for fun, what would happen if Bitcoin went to $1 million from where it's at right now? Let's take it all the way out to $1 million. That's a 1,642% gain. However, that still does not match what has already happened in this market. And the big winners of the market would have been the people who rode all the way up to the Fibonacci extensions by buying during incredibly boring and frustrating times in the market. Now, for the record, I think there's no chance of that happening. I think the more likely thing is that we see what Bitcoin has typically done, and that the end of the Bitcoin bull run is much closer than the general public believes. As not only does the Fibonacci extension take us out to this price level, but the previous super cycles, the two previous super cycles prior to this major one we've had currently, have also taken us out to that level. So for me, it seems the most likely that Fibonacci's are going to react as they historically do. And events in unforeseen circumstances typically show up when they're supposed to show up. But the exercise of this video is not to sit here and say if I'm right or wrong, if the top of Bitcoin's already in, if it's going to go up a little bit more. But even if Bitcoin does do what the general public wants Bitcoin to do, if it goes to $100,000, it's a 75% increase from current prices. In the last 5 days, Zcash has seen nearly that same rise, currently up 54% from where it was 5 days ago, even hitting as high as 68%. Well, a 68% rise for Bitcoin from its current prices takes you all the way out here to $95,000. Could you imagine what the excitement and euphoria would be like in the cryptocurrency market if a 65% rise came for Bitcoin? Meanwhile, meh, Zcash, who cares? It's not exciting like Bitcoin is. But to me, things like Zcash are very exciting. And I'm not here to shill you Zcash. I'm not here to shill you any of the coins I'm going to talk about because the reality is they haven't taken off yet. Are they going to do what the rest of the market has done? We don't know yet. But for me, this game has always been about percentages. The most opportune times to collect Bitcoin and accumulate Bitcoin were during the times of fear and the times of depression, the times of worry, the times where people thought the whole market was going to collapse back in March of 2020 to enjoy a big ride up to create a big giant bubble. This is something that I've talked about a lot on my channel since I started it over 2 years ago. Ethereum had the same phenomenon occur, right? Low accumulation for a long time, staying here underneath $200 and $300 for years until finally breaking out and going on to a big major bull run. The opportune time to collect Ethereum was during these time periods in order to enjoy these massive percentage rises that came for Ethereum. But right now, a lot of people are hoping for a $15,000 Ethereum price. And let's be real, most people came into this market this year in 2021 when laser eyes and diamond hands and the excitement of the market was happening. And if we do go to $15,000 from our current prices of where we're at right now, how much of a percentage rise are we looking at getting here? We're looking at getting 250%. Meanwhile, Ethereum's already risen 4,500 percentage points already. People are trying to get to 15,000. Will it happen? Won't it happen? I don't know. I like to think that sometimes I have a crystal ball, but I don't have one. But again, I can overlay Fibonacci extensions on here and say, well, it doesn't seem super probable that it's going to get that high, and that the bulk of the bull run is already completed for Ethereum, and the big percentages, the turning $100 into $5,000 or whatever, that opportunity is gone. Turning $100 into $350 is possible if Ethereum can break through all the retracement levels and go to these bigger targets. But the reality is the percentage is there. The amount of money that a portfolio is going to make is not very much compared to what has already happened in this market. The opportunity of Ethereum has already passed by. And what's been so interesting about being in this market for the last, let's just say year, right? And I've been in here for many years. I've been in here since before Ethereum went on this big run. Is that as we spent these years down in here, the market was very depressing. The market was very boring, and the amount of people here was a very small percentage of the amount of people that are here now. Big price rises brings in a lot of attention. But the strategy that I brought to this market and that I brought from experiences of being in previous bull runs was that I recognized how much of a rotating market this is and how much emotions swing in this market. When prices are boring, nobody wants to talk about it. Nobody cares about it. They think you're a dingus if you're accumulating things that are very low. After prices go up really high, you're suddenly a genius if you're buying it because it's going to keep going even higher. We saw that same thing happen with SHIB just recently. We saw that happen with Dogecoin as it has now lost 70% of its value. And this is normal stuff that happens in this market. But as I went through the 2017 bull run, I said, what was the strategy that worked the best? Clearly, the thing that worked the best were the people that just held on for dear life. They accumulated and accumulated, held on for dear life. They didn't do any day trading. They just rode it up, didn't try to day trade 20% here, 30% there, but tried to catch these big monster waves that come in cryptocurrency, like with Ethereum, 4,000, 5,000% rides. Good luck day trading better than that. But having a strategy on how could I take advantage of that and how could I be the guy to get that 4 to 5,000% rise. And the mathematics and the percentages all pointed to accumulating during the times of depression and despair and low interest in something. And so as all of these assets have taken off and gone to near 4.236 Fibonacci extensions, and the percentages that have already happened in them are massive. They've already done the massive bull runs. If they go up higher, if Ethereum goes to $15,000 and increases by 200, 300%, that still doesn't compare to what the big play for Ethereum was, which was accumulating during the times of despair and riding into the excitement. Same goes for Bitcoin, accumulating in the 3,000s, 4,000s, 5,000s, 6,000s, riding the big wave for 1 to 2,000% and then selling into the excitement. Those were the big plays. Even if Bitcoin goes to $100,000 and makes another 75%, it will not compare to what the people did who accumulated during the times of despair and depression and boredom and a lack of interest. Those people who accumulated during those times made the most. The math proves it. And I've referenced to this chart many times in the past, and even last Friday we talked about this, of the Bitcoin market cap, and we can see where the alt seasons took place for the altcoin market in relation to where Bitcoin was. The two major alt seasons back in the previous bull runs occurring at the very top of Bitcoin, and once while Bitcoin was breaking out of a multi-year bear market. The entire market went with it at the same time. But as we could see, everything did take off at the ending phase of Bitcoin when Bitcoin was done. We could put a marker right here, and this is right where Bitcoin was at $10,000, went from $10,000 to $20,000. So a 100% rise, right? So that's pretty equivalent, right? Everybody's wanting it to get to $100,000 right now. That's about a 75% rise. But we could switch this over to percentages and then move on over here and see what was the best performer and the worst performer from the point of Bitcoin going from $10,000 at this moment to $20,000. And you can see that for the remainder of the bull run, Bitcoin was the worst performer. Even from $10,000 to $20,000, everything else outperformed Bitcoin. And mind you, that's a 100% rise, whereas the people shooting for $100,000 right now are hoping for a 75% rise. But Bitcoin was the worst performer at that point from 10,000 to 20,000. So, while the general public does not want this to be true, it does not want the 4.236 extension to be the top, or the top already being in right now, or for us to be following previous super cycles, which we have followed all the way up to this point. The general public is hoping and praying that they can get 70, 75% more for Bitcoin. But for me to understand my mindset and what I bring to this channel with my whole thought process is that I don't care about that. I have always been the type of person to accumulate when things are absolutely horrendous and there's no interest in these assets, and then ditch them when all the excitement arrives. And then I try to use the past as a reference point for what could end up happening in this market again. Typically, markets don't repeat the past perfectly, but there's usually some type of rhyme or rhythm to how they perform. And if in previous topping structures for Bitcoin, we see that the whole altcoin market does take off with it, I have to say to myself, okay, that's how I have to personally play my cards. Will it be right? Will it be wrong? I don't know, but that's how I have to play my cards in here, is that I have to go into it with the assumption that, hey, every single time these alt seasons happen, every single coin ends up moving upward with the whole market. So if I'm going to stay in this market and if I'm not going to get out because I'm scared and terrified, but if I'm going to continue to play in the most dangerous market and the most volatile market in the world, how am I going to end up doing it? Well, I'm not going to be chasing the very last percentages of these things as they reach out to their 4.236 extensions. If they even get to them, I'm not going to chase the very last couple percentages on these for like Bitcoin or Ethereum, barely below there. I am going to rinse and repeat and do what this market has done and go after the things that still have the percentages available in them, like XRP, a 4.236 extension. If it reaches out as high as Ethereum went or as high as Bitcoin went, hey, still over 1,000% for it to get to those types of prices in the market. Will it get there? I don't know. I have my bets placed that it will. But if Bitcoin was to do that same thing and go up 1,000%, how high would Bitcoin have to get? It would have to get to over $600,000 for those same types of percentage rises. Is it reasonable to think that XRP can even rise that high, that it can go to $10 to $11? Well, we could look to the past and see that in the 2017 bull run, 2 times that XRP was able to catch up and bypass the market cap of Ethereum. It is the only altcoin with the history of being able to do something like that. If XRP were to catch up to Ethereum right now, how much of a rise would that be? That would be a 932% rise. What does that put the price of XRP at? A little bit over $10 if Ethereum stayed right there and XRP caught up to it. Is it reasonable to think that as Ethereum tops, XRP goes up and tops with it? Sure, that's exactly what happened at the end of the last bull run. As Ethereum went up to its very top, XRP bypassed it at the top. A complete catch up. Now, we talked about Zcash earlier. What would happen if Zcash did what the rest of the market has done, what Ethereum has done, what Bitcoin has done, and if it did rise up to these price levels? Again, getting up to near that 4.236 extension or even just a 3.618, looking at over 1,000%. Now, my expectations for Zcash are even a little bit less than that. I actually have a strategy where I use the rally prior to capitulation, leading to an extension. Still, even in that circumstance, it gets up there to 975%. And this is how I structure a lot of the things that I do. Now, will Zcash do this? I don't know. I'm placing my bets that it will. I've showed in the past how these altcoins all have a tendency to take off together. Will Zcash get that high? I don't know, but I see the opportunity for it. I don't see the opportunity over there on Bitcoin and for Ethereum if I'm going to use a specific structure that I'm going to have for my plans. If I have rules that I'm going to follow, if I have a structure that I'm going to follow, then those don't have the percentages available. I have to go with some type of mindset that if I think Bitcoin's going to go to 100,000 or 200,000, I have to say this time is different. None of that stuff matters. And I'm just going to do something based on nothing that has happened in the past in this market and the way this market has never behaved because this time is different. And that's just not a rule that I can follow. I have to follow whatever has happened in the past can potentially happen again. And I have to base everything I do off of what has happened before and how this market has operated multiple times in the past. And so if I'm going to continue playing in this market, I've got to go after, for me personally, the things that still have percentages left in them. Because when the bear market does strike, we know it because we've been through it and we've seen it multiple times. A lot of these altcoins lose 90% or more of their value. They just do. When they go on 4,000% rises in less than a year, they lose 90% of that value in the bear market. And so for me, I'm on the hunt for things that haven't done that yet. What still has the potential to rise high And I search for things like this, like Zcash. And again, I'm not advising anybody to do anything. I'm not an investment advisor. I'm not a financial advisor. Do your own research and make your own decisions and get educated. Hopefully, I'm part of your education. The whole point of this is for me just to teach mathematics and percentages and understand why they are so important to me. That if I'm going to look for something in this market and if I want to get some type of big rise come out of here, like we've seen happen in this market before, like with Ethereum, then I'm on the hunt for stuff like this. I'm on the hunt for things that still have percentage opportunities remaining in them. Again, we don't know how the market will behave or if this will ever come to fruition, but we know that historically when Bitcoin tops, we've seen that all the coins go with them. Will they reach out this far? We don't know, but this is the rule system that I follow. And so for me, my major interests in this market remaining, and everybody's different, everybody do whatever you want, but you get an insight into my mind of why I'm like, hey, Bitcoin and Ethereum are not of interest to me because they've already reached out so far and gone on these multi-thousand percentage runs to the upside. And mind you, I rode both of them all the way up and left the track record to prove it. Where's the other stuff that potentially has the opportunity? And it's no secret that I've talked about Zcash, that I've talked about XRP, that I'm interested in Bitcoin Cash, EOS, and Dash. And that in that list used to be Ethereum Classic, which eventually did it. And these things happen quickly. And we can even see this is what happened over here with SHIB. A big pullback, 6 months of absolute torture and terror and no interest, right? Nobody cared about SHIB. It wasn't exciting. It spent 6 months hanging out way down here after losing 85% of its value at that point. But it stayed there and went flat for a long time. And then suddenly, out and away it goes. And then what happens? Rinse and repeat. Retail investors all buy the top again after not caring about it during the low accumulation times. So, while retail investors all poured into Bitcoin as the laser eyes and diamond hand stuff shows up and all the $300,000, $200,000, $100,000 price predictions start coming out, the reality is the percentages of even those wild predictions are dismal percentages. And meanwhile, Bitcoin is still sitting here just barely below a 4.236 extension. So for me, the interest that I have in this market is not caring about chasing final percentage opportunities if they're even there, but where can I go to try to be the guy getting in down in here to get another big run up and take advantage of bigger percentage opportunities. That even for this to happen here on Bitcoin right now, a 900% rise, like we talked about, you need a $500,000, you need a $600,000 Bitcoin price in order to get that type of percentage. And what happens a lot in these times is people get caught up in being part of a movement. I'm part of something, right? You know, the dollar's collapsing, inflation is going crazy. I have to be part of this. I have to get out of dollars and get into hard money. But the reality is this hard money hasn't done much in quite a while. The big run up took place during the first couple months of this year, during November of last year, November, December, January, and February. That's where the run was. Since then, it hasn't done anything. But the narrative is hard money and inflation, which is what we always talked about what would happen, right? The expectation was, hey, the DXY is going to fall. But the reality is the DXY hasn't fallen, right? And the DXY is a measurement of the US dollar versus other currencies. And the other currencies are falling faster than the dollar. And we know that inflation is running rampant. And what is the narrative for the general public? The general public narrative is the inflation, which we always talked about, that they would pile in when inflation scared them, when they didn't want to be in the dollar anymore and they were fearful of the dollar. Regardless of what these charts say, they're just running away from dollars no matter how high the price is. And I try to stay as far away from that line of thought as I possibly can, and I just focus on mathematics and percentages. And for me, the mathematics, the percentages say there's just not enough to chase over here in Bitcoin for me. There's just not enough to chase over there in Ethereum for me, regardless of if Bitcoin goes to 100,000, 200,000, 300,000. The percentages are not there. At least not while I see other things that still have the percentage opportunities. And for me, if I'm going to play in this dangerous market, I have to make my bets, the blockchain backer. You do whatever you want to do. I don't promise any guarantees of anything. But if I'm going to make my take my chances in this market, I'm going to go after the percentage opportunities. I'm going to go after the things that still haven't gone on to do what we see this market do and how quickly these things can happen. And so I get asked all the time, am I still in EOS? You better believe I'm still in EOS. Nothing has changed with my thought process, using the exact same strategies that I've used on everything else, right? The rally prior to capitulation leads to a 4.236 extension. I still use these same measurements until this market tells me everything is falling apart. But right now, the opportunity for me to be in there, I do the measurement, I do the math. It all makes sense to me that the mathematics make sense. Bitcoin Cash, the one everybody loves to hate. However, it's available over there on PayPal. It's available on Robinhood. You better believe I'm in there looking for the percentages. Will it be right? Will it be wrong? I don't know yet. But if these assets are going to play any type of catch up to what the rest of the market has done, the opportunity for me is in the catch up and in the percentage rise of those catch ups, rather than betting that these things are going to blast through all these Fibonacci's and go on to these big prices, which still, even these big prices, don't have a big percentage attached to them. And so the point of this video is not to teach you, hey, these are the assets you should go buy because they're all still really low. It's just to give you more of an insight into my thought process, into what I say on this channel, that when I'm talking about Bitcoin's top coming in and that I'm bearish on Bitcoin, you can understand why. We've reached out to these extensions. We've reached out to these previous supercycle extensions. Fibonacci's have a history of being very repetitive throughout history, and they work in way more than just charts, but in human behavior, and events and narratives and actions tend to show up right when they're supposed to, like with Elon in China. And so as we go into the remainder of this bull run and whatever's left in it, I've been through what happened in 2017 and watched how these things take off and go crazy. And my bets are all placed in those areas of the market, into the places where boredom, depression, worry, frustration, that's where I want to be. I want to be where none of the excitement is, because it's after these periods that sudden excitement tends to erupt. It's what we also witnessed over there in Ethereum Classic. And time will tell if that shows up for all of these other assets that are still really low. But my bets are placed that they will. Like over here on the XRP price chart. You better believe my bets are placed that they will. And it's because I pay attention to math and I pay attention to percentages. And so on that note, we'll wrap it up, and I wish you a happy Fibonacci day. But all right, I said I would keep videos short this week. That's a lie. This thing's like 30 minutes long. But okay, let me go ahead and wrap it up. Thank you so much for watching. If you're looking for something to do, I do have a course that I put together over here on bcbacker.com. This is a course where I deep dive into the previous Bitcoin bull runs, the different altcoin market cycles. I tie them all together to show how this cryptocurrency market has worked in the past. I talk about my personal exit plans in here, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. And of course, I talk about mathematics and percentages and why those are so important to me. Last week, I did add 2 new things. Maybe it was a little less than 2 weeks ago. I added the Ethereum Part 4 final update, exit plan for Ethereum Part 4 final update, and I added the Blockchain Backer exit plan Part 4 progress update in here. These videos are available to anybody enrolled in the course and anybody who newly enrolls in the course. I do have some market updates and additional content in here, and you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.